Hello everyone, and welcome back to the channel. Today, we're diving deep into a topic that is, without a doubt, one of the most powerful yet underutilized tools in a trader's arsenal, the trading journal. I know it might not sound as exciting as finding the next 10-bagger stock, but I promise you by the end of this video you'll see it as the single most important habit you can build to transform your trading career. So, what is a trading journal? In its simplest form, it's a detailed log of all your trading activities. But it's so much more than just a list of wins and losses. A proper trading journal is your personal performance coach, your psychological mirror, and your strategic playbook, all rolled into one. It's where you turn raw data into actionable wisdom. Think of elite athletes. They don't just play the game. They obsessively review game footage, analyze their every move, and identify weaknesses to work on. Your trading journal is your game tape. Let's start with the basics. What should you actually record? At a minimum, for every single trade, you should log the date, the asset you traded, the entry price, the exit price, your position size, and the final profit or loss. That's the bare bones data. But to truly unlock its power, we need to go deeper. You should also record your stop loss and take profit levels. Why? Because this tells you if you're sticking to your plan. Are you moving your stop loss out of fear? Are you cutting your winners short out of greed? This data will tell you the objective truth. Next, and this is crucial, you need to document the why behind each trade. What was your setup? What technical indicators or fundamental analysis led you to take this position? Was it a breakout, a trend continuation, a mean reversion play? Write it down. Be specific. Take a screenshot of the chart at the moment you entered the trade and another when you exited. Annotate them. Mark your entry, exit, and the key levels you were watching. This visual record is incredibly powerful for later review. Now, let's talk about the part that many people skip, but it's where the real gold is hidden. Your psychological state. How are you feeling when you entered the trade? Confident? Anxious? Were you feeling FOMO, the fear of missing out, after a big green candle? Or were you revenge trading after a loss? Be brutally honest with yourself. Write down your emotional state and your thought process. I felt rushed because the price was moving quickly, or I was confident because the setup met all my criteria. This practice of self-awareness is what separates amateur traders from professionals. The market is a reflection of human psychology, and understanding your own is your biggest edge. So, you've been diligently logging all this information for a few weeks or a month. You've got a growing database of your own performance. Now what? This is where the magic happens. The review process. Set aside time every week, maybe on a Sunday, when the markets are closed, to go through your journal. Don't just glance at the P&L. Look for patterns. Start with the numbers. What's your win rate? What's your average win versus your average loss? This is your risk-to-reward ratio in action. Many new traders are shocked to find they have a high win rate, but they're still losing money. Why? Because their average loss is far greater than their average win. Their journal will show them they're letting losers run and cutting winners short. That's an immediately actionable insight. Then, filter your trades. What time of day are you most profitable? Are you better at trading in the morning or the afternoon? What specific setups are generating the most profit? Maybe you'll discover that your breakout trades are consistently profitable, but your attempts to pick tops and bottoms are a disaster. Your journal provides this data, black and white. You can then decide to focus more on what works and stop doing what doesn't. It's that simple. You're using your own history to refine your strategy. Let's dig deeper into the psychological review. Go back to your notes on how you were feeling. Do you see a pattern? Maybe you'll notice that every time you trade out of boredom, you lose money. Or perhaps your biggest losses all came right after a big win, when you were feeling overconfident and took on too much risk. This is a game changer. Identifying these emotional triggers allows you to build rules to protect yourself. For example, A rule could be, after 3 consecutive losses, I will stop trading for the day. Or, I will never enter a trade just because I see a big move and feel like I am missing out. These rules, born from your own experience and documented in your journal, become the bedrock of your discipline. Keeping a journal also builds accountability. When you know you have to write down every single detail of a trade, you're less likely to take that impulsive, low-quality setup. You'll start asking yourself, how am I going to justify this entry in my journal later? This simple question acts as a powerful filter, forcing you to adhere to your trading plan. It creates a pause, a moment of reflection before you click the buy or sell button. Over time, this builds the habit of disciplined execution, which is the holy grail of trading. Now, you might be thinking, this sounds like a lot of work, and yes, it is, but so is anything worthwhile. You wouldn't expect to become a concert pianist without practicing scales, would you? You wouldn't expect to run a marathon without training. Trading is no different. The work you put into your journal is the highest return activity you can do. It's the work that compounds over time, turning you from a gambler into a calculated risk manager. Let's talk about tools. You don't need fancy software. You can start with a simple notebook and a pen. Or you can use a spreadsheet like Google Sheets or Excel. The advantage of a spreadsheet is that you can easily sort, filter, and create charts to visualize your data. There are also many dedicated trading journal software and web apps out there that can connect directly to your broker and automate some of the data entry. Find a system that works for you and that you'll actually use consistently. The best journal is the one you stick with. Let me share a personal story. Early in my journey, I was struggling. I felt like I was taking 1 step forward and 2 steps back. My P&L was a roller coaster. It wasn't until I got serious about journaling that things started to click. My journal revealed that while my technical analysis was decent, my emotional management was terrible. I was constantly breaking my own rules. Seeing it written down, trade after trade, was the harsh wake-up call I needed. It forced me to confront my weaknesses and build a system to manage them. My trading journal was the tool that helped me build a professional mindset. So, your action item for today is to start your journal. Right now. Don't wait for Monday. Don't wait until you feel ready. Your very next trade. Log it. Log the entry, the exit, the reason, the screenshot, and how you felt. Make it a non-negotiable part of your trading routine, just like checking the charts. Treat it with the respect it deserves, and it will pay you back 100-fold. It is the single path to understanding your edge, mastering your psychology, and achieving consistent profitability. Thank you so much for watching today. I truly believe this is one of the most important videos I've made. If you found this helpful, please hit that like button and consider subscribing for more content to help you on your trading journey. Let me know in the comments below if you keep a trading journal and what's the biggest lesson it has taught you. Stay disciplined, stay patient, and I'll see you in the next video.